Hey guys, this is Brandy Fox with Be the Entrepreneur Consulting Agency coming to you live again with Miss Taylor R. Pringle with Pringle Financial Services. And we are going to be talking about the end of the year business taxes checklist. So, what this conversation is all about is knowing what to do as you prepare for your end of the year business taxes. As Taylor probably know firsthand, and as all tax preparers already know, when it comes to the tax time, a lot of tax preparers are stressed out. Entrepreneurs are stressed out. The tax preparers are stressed out because there are a lot of things that entrepreneurs are not putting in place prior to tax season, which is most of the time that January to April 15th date. They're not prepared. They don't have a lot of the necessary information together. They don't have their finances in order for them to be able to get the adequate tax credits and deductions that they deserve to be able to get the money they need. So today, we are going to be covering a lot of those items just so y'all can know what y'all need to do to be able to adequately prepare for tax season 2023. And of course, throughout this live, we are going to have Miss Taylor on here, and she's going to be talking about her services, what she does, but really talking about what you can do to structure your business. So from here, Taylor, I'm gonna go ahead and let you introduce yourself and tell everybody a little bit more about you.
What's going on, you guys? So please excuse, gonna put it out there. Please excuse the hospital gown, y'all. I am preparing to give birth, and my blood pressure was high today, so they made me come to the hospital. But everything is fine. As soon as I got here, it's elevated, so it's just been a routine for the past 3 weeks. But I was not gonna let y'all not get this live tonight because of that. So I definitely want to give back to Brandy. Thank you so much for having me on again. I definitely appreciate you. I'm Taylor Pringle, the owner and operator of Pringle Financial Services here in Columbia, South Carolina. However, we are global, so that means that it doesn't matter what state that you're in. We operate in all 50 states for your tax and tax preparation needs, our bookkeeping needs. Doesn't matter where you're located at. Our goal as a organization was to be able to give you the ability to have somebody that you can come to if you're a business owner year round, and you can get the help that you need to be able to grow your business, but also feel confident with no issues and to have integrity along the way to give you the best possible service that we possibly can. So that's what Pringle Financial Services was created to be able to do.
I love it. I love it. And if you are not following Taylor, she is on Facebook. You can catch, let me take this off so you can catch it at the bottom. It is at taylor.r.pringle. And y'all follow her. She is always dropping gems on a daily basis about things that she sees and experiences, not only as an entrepreneur, but as are you an accountant? Let me make sure I get the terminology right. Accountant.
I go by just a tax consultant because I operate year round, and so I
Perfect.
kind of I can do it all for the client, so that way it's just not just one thing. Like if I, so most of my like year round clients, like I'm gonna do like their bookkeeping, and I'm also gonna do their bookkeeping. I'm gonna do their tax planning, and I'm also gonna do their tax preparation. So that means
Perfect.
that it has to have to be kind of like spread all out. Once I see it, I see everything all at one time.
Perfect. So Taylor is here as a tax professional for all of your business tax needs, and she
I do
specializes
personal
in.
too, so I'm not gonna forget about the people for who don't have businesses because I don't want to leave you guys out too. So I do personal, but I love to specialize in the business category because a lot of people do get misled in the business category.
Perfect. Thank you for correcting me. I want to make sure I let the people know everything that you do. Um, So, with that being said, anybody that has hopped on, please feel free to share this live. We want to make sure that we getting this information out to all the entrepreneurs out there that are trying to figure out how to get those numbers together. And I'm gonna tell you what really let me know that people were not prepared was when this Beyond Open grant opened and people were stressed out about that financial portion. If you had a either a professional tax preparer or if you had some type of tax software, you would have been adequately prepared for all of the documentation that they required. So, doing business plans for that, it really opened my eyes to know that this live was definitely needed because it's a lot of things that even entrepreneurs that's been in business a long time, like I had entrepreneurs that's been in business 7 to 10 years, and their finances was still not in order. So I'm excited to do this live. And with that being said, we're gonna hop right into our first topic, which is how to organize your business revenue. Taylor, what are some tips that you would give some entrepreneurs as we're kind of closing out? We're going into the middle of fourth quarter. What are some things that they can do to go ahead and start getting prepared for the 2023 tax season?
I would definitely say have some type of system in place. There's so many different things you can do. For people who are just getting started, I would definitely QuickBooks. QuickBooks is very, it's affordable, it's easy, it's easy to be able to navigate. If not, you can always have somebody do it for you, but it gives you everything. For one, it's just making sure that people have business bank accounts. I don't care if you ain't made a dime. You made $1, $5, $20, $10,000, $100,000. Like you need to do not commingle your money. So you need to have your personal bank account and you need to have your business bank account. And I'm gonna give you a gem that most people don't know. When you're picking a business bank account, make sure that it is a global bank, because sometimes these local banks that we get is not going to help you in the long run as you continue to grow your business and when you really start building business credit, because of the fact of the matter is that they don't report to the credit bureau. So now you're in a position where you think you've been building business credit. They gave you this business credit card with your business name on it, and that loan or that credit card that you got is in your personal credit. So let's make sure that when you're picking a business bank account, for one, let's make sure that that bank is going to be a global brand. So that way, now when you do start to get to the level when you're ready to start building business credit and to elevate your business, that you actually get those things. So, like I love to say, Navy Federal, Chase, First Citizens, um, what's another one? PNC. So those are kind of the some. There are probably gonna be other ones in like whatever area, but those are like more like the common ones. Um, of course, that you go ahead and get your business bank account with, but make sure you're separating your business income so that way now, when you get QuickBooks, it's super easy. You upload your business bank account, you upload your business credit card. It literally brings all your transactions. So now you're easily able to separate your revenue from your expenses. You can or categorize your expenses properly so that way you know, and that's going to be the easiest thing. And it doesn't matter if it's even the end of the year, because the good thing about it is you can always, if you've been doing everything the right way and you've been utilizing your business bank card, and make sure y'all are using it for business purposes, you guys. Like we gotta stop doing, oh, I'm hungry, I'm gonna stop by Chick-fil-A and get me something to eat. That is not a business expense because you hungry. You need to be able to, that needs to come out your personal expenses, even though, and it's probably a different topic for a different day. Even though I know if you're a sole business owner, so like I'm a sole full-time business owner, so I know whatever I do when it comes to my bills or me eating personally, that I have to utilize the money that's in my business. But that's when you get into areas where you're paying it's just different categories, and you separate your finances so that way now everything is being organized and you don't have to question anything. So
No, I
now,
totally agree.
yeah, so now that it's the end of the year, you really want to start looking, and most people don't tell y'all is that you are taxed on your gross income. Do not let anybody think just because you, oh my gosh, I had a crazy year, I had to spend out so much money, I just got the business started. Deductions are not dollars. I know that's going to be coming up in the next one, but just a quick thing, deductions are not dollar for dollar. So you are taxed on your gross income. So some of you guys may be in a category where you can adjust your tax structure, but you don't know yet because you're not at that particular area. So what you really want to do is go back through January to now and physically see what is your gross income, like how much you made without any deduction. And that's going to be your determination of where you're going to fall at in your tax bracket.
So when do you think is the best time? Like we talked about this a little bit early. So if you are LLC, what is the gross amount that somebody would need to make? Would you suggest where they should go ahead and start transitioning into an S corp if you have an LLC?
My suggestion would be 75K or more. And at that point, you kind of got a little bit of wiggle room where you're able to sit here and say that you can actually afford to pay yourself which makes sense on top of any other deductions that you have. So most of I recommend that 75K range and above. Definitely, if you $100,000 or more, you should not be filing a Schedule C. You're still filing a Schedule C and you're grossing over 100K, 200K, 400K, like you really need to be like you need to reconsider because for one, you are literally you're hurting yourself in the long run, but you're also not getting the benefits that you could get with that amount of money that you're making.
All right. So when we talked about, I know you talked about early as far as the, dang, you said something early and I forgot. You were talking about QuickBooks, when you were talking about QuickBooks. So when it comes to QuickBooks too, and now something that they've done, I don't know how long, I just kind of started getting my clients on QuickBooks. But one of the things that QuickBooks does, and I refer my every client I have to QuickBooks if you're not ready for an accountant or a bookkeeper. But with QuickBooks now, it literally, if you log into your bank account, it literally pulls all of your information for you. You ain't even got to upload
Mm-hmm.
your stuff anymore. Like it literally, when you create your account, it asks you, would you like for us to pull, your revenue from however years? And the good thing about that is once you pull that revenue, you literally log into your bank. It takes the computer about 3 minutes and it pulls all of your information from your business bank
Mm-hmm.
account. So you literally have to do nothing. And from there, your only goal at that point is itemizing, and that's basically
Mm-hmm.
where you categorizing, or however you want to put it. And that's basically where you are putting a category for each item that you use. And you don't have to do it for all of them, because the good thing is QuickBooks is set up on a smart system. So basically what that looks like is after you answer a few questions or categorize a few things, at that point it kind of puts in that smart mark and it go ahead and categorize everything else for you. So now more than ever, especially as we get into the end of the tax season, y'all, if you do not have QuickBooks, and I think they got like a 45-day free trial. So even if you don't all the way
Mm-hmm.
have the money, if you are looking to efficiently get your taxes filed the first of the year and you don't have that money for a bookkeeper or an accountant, go ahead and get that QuickBooks. Pay your little
Mm-hmm.
$20 a month and go ahead and log into your business bank account. Let them pull that information. That way, when it's time for taxes, you can go ahead and give your accountant or your tax preparer tax access to your QuickBooks, and they'll be able to pull everything they need to be able to adequately get you set up for your
Yeah.
tax. So from there, and that's just me just piggybacking off what Taylor said earlier when it comes to that. So Taylor, let's roll into business credits versus deductions. So I'm curious about this point because I thought it was the same. So tell me a little bit more about what's the difference between a credit and a deduction.
So credits are dollar for dollar. Deductions are not dollar for dollar.
And
So
can you tell what dollar for dollar
so
mean?
yeah. So when let's start with deductions. So a lot of people are big on the deduction standpoint of things versus the actual credits. So most people don't understand credits. They're not too many. There are credits, but most people don't know how to utilize the actual credits for certain things. So when it comes to deductions are more so like let's say that uh you made $100,000, and with the $100,000 that you made, you wrote off 80,000. So they're gonna say that you made 20,000 because they're gonna take that time frame from it. But with the 80,000, you're not getting a full $80,000 deduction. What that's gonna do for you is it's gonna take you following that 20% fall range. Out of that $80,000 deduction, they're only gonna give you a $20,000 deduction. So you're only getting the percentage or whatever tax bracket you fall in.
And so, okay, so going into credits, what's the difference with credits?
So there is a credit, and most people don't know about it. It's a work opportunity credit, and you can actually qualify for that credit for 2 years if you have a business where you have employees. And what that credit is based off. You can get anywhere between 1,200 to $9,000 back based off each employee. So it just kind of depends on that. So that with that, they're literally giving you back money. So it's kind of just like the child tax credit. They're literally giving you 3,000. Like when they were doing the credit, it was like 3,000. they're literally giving you $3,000 back on that credit. So before you even file taxes, you already got $3,000. If that makes sense.
I love it.
So
I
with
love it.
credit, before you even do anything, you already got the money.
And that's just for having employees.
Well, no, I'm just saying in general, that's how credits works. Like they're giving you back the dollar for dollar back on the actual credit versus deductions are only a percentage base. So even though you did an $80,000 deduction, you're only going to get $20,000 deduction, but they still subtract the 80,000 from your income. So it's showing us you only made 20,000, but you only got a $20,000 deduction from your actual.
I understand exactly what you're saying. So for the work opportunity credit, um, what makes you eligible for that?
They're different. So, I mean, if you're a business owner and you have a W-2 employee, so they cannot be contractors, have to be W-2 employees, and it's based off the type of their certain requirements of people that you have to actually employ. So it's not just
Gotcha.
like it may be people that are ex-cons, I mean, like felons. You may, if you hire somebody that's on SNAP benefits, if you hire somebody that they're different qualifications, veterans. If you hire disabled veterans, they're different qualifications. So based off those different qualifications, if you hire those, and that paperwork has to be done within a certain amount of time frame of employment, and you have to keep track of different of their hours and everything else. And based off that, when you get ready to file, based off the amount of hours that they work, you can get anywhere back between 1,200 to 9,000. Yeah,
Perfect. That's good to know. So basically, if you working kind of at that with those at-risk population type things.
yeah, that'd be it.
Okay. Perfect. Perfect. So going back to our topic about organizing your business revenue. Let's talk about receipts. I get people that are like stressed out about receipts. They got them everywhere. I know for me, I have my kids are my receipt transpires. So they take my pictures, they upload it, everything I need for it. But can you talk a little bit more about the importance of receipts when you're doing when you handling your business finances?
Yeah, so most people, I've had people come to me and say, "Girl, I don't need no receipt. Somebody told me I can use my bank account." That is a lie. You need receipts, especially if it's anything that's over $75 or more for a particular deduction or write off. You want to have a receipt, and the reason why, because you want to have that be itemized. Your business bank account shows that you were not commingling your money, and gave you the ability to be able to separate your finances. But what the receipt does is it itemizes the receipt. Let's say, like on you, let's say somebody purchased something from you, Brandy, and on your receipt is be the entrepreneur on a bank statement. And they pay for you for a course. And let's say the course was $300. Your business, their bank account says be the entrepreneur, but the IRS don't know what it is. Their job is not to go back and research it. Their job is not, they don't care. They see the $300, but the receipt is going to show blah, blah, blah course. And then that course is going to be, okay, that course was used for me for my business. So now they're able to sit here and say, okay, cool, no problem. We can go ahead and take that because you needed that for your business to grow your business. You paid it. The receipt says blah, blah, blah course. Now they can take that deduction if you in the event that you were audited. Most people look at, oh, I don't get audited. I want y'all to stop believing the hype. People are getting audit letters. They may not want to tell you, but audit letters has been going out. They do not audit you in the same year. Most people, I had some people come to me with audit letters from 2020, 2019, and we're in 2022, y'all. So don't let people think and get you caught up in a position because they're not giving you the full information.
And if I'm not mistaken, you can be audited up to
3 to 5 years. They go back up to
yep,
5 years.
up
And
to 5 years. I thought it was
they
7. It ain't
actually
7 no more.
and they just did that. They passed that where they're actually funding it more, putting more money into funding to increase the audit.
I saw
So
that
you
Biden signed that
definitely,
order because of all the money that went out during COVID that he's signing to increase the workforce for IRS. They trying to get their money back, y'all.
by any
They
means
trying to get their money
necessary.
back. So all y'all that slipped and slide on that PPP loan and you think you good, baby, you got 5. You literally have
No,
5
no, no.
years.
They actually did them. They actually did those 10 years. They're allowing them to go back
Ooh,
up to 10 years. Yeah.
dang. Baby, you think
Hmm.
you could, but you'll be a whole different person in 10 years and they'll mess around and send you that out of letter. Oh, you got that PPP loan, where that business at? And y'all know
So,
y'all
and
ain't got no
most
paperwork.
people don't think to, most people don't think to digitize their receipt. So no receipt is going to last you. I don't have receipts that can last me 90 days sometimes. Like
Yeah, I
receipts
was like,
just
girl, that thing be
stay.
gone.
So you want to make sure that, I feel like you should, if you're with your revenue, you should, depending on your business revenue, whether it may be monthly or quarterly, but definitely quarterly, you need to be going through and reviewing your revenue and up, like doing your receipts. And so for some of you guys who aren't grossing a certain amount of money, like you got time. Let's be real. Give yourself an office day. Put that stuff to the side. You're gonna be a business owner, be a business owner. I'm tired of sugarcoating stuff for people. If you're gonna be a business owner, be a real business owner. Take that time, make yourself an office day, and digitize your receipts. Upload them, take pictures of them, make them digital copies of it. That's what you have to do. That's at the end of the day, as you're growing, how you start is how you finish. So if you're not used to doing it, when you start making the money and you really need those deductions, you really need those write-offs, and you ain't taking the proper precautions, it's just gonna be on you at the end of the day. And for everything that you write off, and I've had new clients come to me from when a previous person told them they didn't need receipts. They ended up getting audited for everything that they did not have a receipt for. They added that money back and they got taxed on it and they got penalized on the money that they could not claim because they didn't have proper documentation.
Receipts is serious, y'all. Receipts is serious. If you got kids, hire your kids. Hire your kids. My kids do good. They literally get my tablet, they take the pictures, they upload it into my Google Drive. I make them separated by the last four-digit card number, so that way I know what business it go to, and they literally upload it. And we do this on a monthly basis. And I pay them a strong $20. Everybody happy. You know what I'm saying? So and then before I had them though, I would take pictures immediately. So literally, like once I pay for something, I'll just go ahead and take my phone out and take a picture, and then at a later date, I would just upload it. So it's flexibility, but we just want you to know whatever you've been told about business receipts about not needing them, it is a lie. When you get gas, anything you use your card for, it needs to have documentation for that to
Mhm.
make sure that you're good.
And
Also, for
another tip I'm
anybody,
going to give
oh, go
is,
ahead.
if you're a business owner, one thing I like to tell my clients is, and if you follow me, I mean, I just gave this nugget the other day because I was given the updated mileage or whatever. You have a mileage is a mileage expense or an actual expense method. So the mileage method or actual expense method, and so you can't claim both. So if you're gonna do mileage or if you're gonna do actual expenses, but for business owners and you're building business credit, get you a business gas card. A business gas card, and all you're going to use it for is your gas. The good thing what that does for you is when you have a business gas card, not a Visa card, not a MasterCard, like the actual, like literally it's only used for gas. When you go to the pump, before you get gas, you put your card in, you have to put your odometer in there. So it's literally going to track your miles for you. It's going to track how much money you put in there, and it's going to track your gallons. So now all that's going to be kept on your actual business card. And so now when you at the end of the year, you print off your receipts. So it's literally going to say what gas pump you was at, where you was at, how many miles you drove, how much how much the cost of the gas was. So now you're killing two birds with one stone. So now you ain't got to figure out, oh gosh, how many miles did I drive? How many this and that, and the third. It literally tracks everything. You can literally pull your whole report for the whole year, and it's giving you a receipt because it's sending the receipt to your account for your whatever business gas card you have.
Perfect. And I heard it's good. I have a tax prepared, not tax, a business credit colleague, and he said it's good for business credit too. Like that, business gas cards are really good for that first tier of getting your business credit established as well. So it's a dual purpose, y'all. It helps you track your mileage and your gallons per year as well as build your business credit. So if you have the opportunity, you see one of them Shell gas station cards, go ahead and apply for it. And go ahead and take that business credit up a notch. So with that being said, let's go into business tax 2023 planning. So Taylor, what would you tell people, like what are some of the things that you tell your clients as we're coming to the end of the year, as they're preparing to give information to their tax preparer? What are some things that they should have in order to be prepared to give to their tax preparer coming up 2023?
For one, their revenue. Like, I mean, you should be knowing your revenue regardless. Like, you should already know like how much money you already at for the year, and then your expenses. You need to know what you can do for like what can you write off for your particular business. There are generic expenses for everybody, like anybody who's in business, and then each particular business is gonna also have a different type of expense based off whatever industry they fall in. So you just want to start getting that stuff together. And if you don't know what you may qualify, then you definitely need to reach out to somebody um, that can properly help you tax plan. That's what tax planning is. Like you have a tax paying season and a tax planning season. So I always tell business owners, listen, like if you're a business owner, that means that we made whatever amount of money you made it tax free all year. Versus the average person who has a W-2 job, they've been paying taxes throughout the year. Versus us, we don't pay taxes until tax season, which is January through April. That's why you want to utilize your end of the year, October to December, to really tax plan. So that way you can kind of see where you fall at. That's why you should be knowing how much money you're grossing, and then to be able to know exactly what can you be able to, what are you able to deduct. Like there's all these crazy things like, oh, clothing. Like I love to use clothing as one. So many people like, oh man, people tell me I can write my clothing off. That is a lie. If it is ordinary and you can wear it outside of business purposes, you cannot write that off. However, let's say hypothetically you got a suit or you got an outfit and you got your logo visibly stitched on the actual outfit, then that is considered a deduction because you're not going to wear that. You're not going to wear your business logo anywhere that you don't want your business represented in a proper way. So therefore, now you can write off the cost of the embroidery, you can write off the cost of the outfit, the cost of the dry cleaning, all those good things go into play from there. But if it's something like a plain suit and you just got it and it's just regular, you can wear it outside of business purposes, that is not a write off. So it's just different things that and when you don't want to get caught in that hype because it looks like, oh, I can do that because I got it for business purposes.
No, I agree. My old tax preparer, like back in the day, like 10 years ago, well, not even 10, probably like 5 years ago. But girl, she was telling me how like when she had like her tax preparing business had grown. So she had she went to Neiman Marcus and dropped $10,000 in one day at Neiman Marcus on shopping. And she was saying how she got out of it for the first time ever, and how she had to pay that back because they said that that was not a business purchase. So, I don't know. I don't know why she would go spend that amount, but I guess
Well, I
her
guess people
background.
say people say like, oh, because I need to look good for my business or whatever the case may be, I can utilize it, and that's not the case. Like depending on your business, most people don't care what you got on. What can you do for me? Can you get me right? So people look at it as if like, oh, I need to look good for my business. So because I need to look good for my business, this is a business write off, and it's not because you can wear that outside of business purposes. Again, the IRS doesn't consider that to be a business write off. However, like the only thing would be like a person that has scrubs. Like you're not gonna wear scrubs to a party, you're not gonna wear scrubs to an event. So those are things that like they don't even have to get anything embroidered on there. If they have something where they have to wear scrubs, they can write those off because you're not gonna wear that outside of work. However, if you like a nice sexy dress or like a gown, you can wear that to a wedding, you can wear that to a business event. I mean, you can wear it, anywhere. So that's not really considered. But if you got a logo visibly stitched on it, that'd be different because you're not gonna wear your business logo somewhere that you don't want your business represented in a proper way.
I agree. I agree. I agree. And when she told me that, that kind of like changed. I'm like, oh shoot! Like she was like, yeah. She was like, that's literally why they said they out of me because I spent that $10,000. So I'm glad that you talked about clothing and the importance of making sure that it is business based clothing. I know for me, a tax tip I'm gonna give, just being somebody with all of my businesses, I use 1099 independent contractors. So One thing that and I ain't gonna hold you, I'm still bad with it. This year is probably my best year ever out of 11 years, but making sure that all of your independent contractors have W-9s. Those
Yep.
W-9s are important. Number one, you should have them regardless. But number two, the good things about having that on file is that you can literally take those W-9s that they filled out and send them to your tax preparer for those 1099s to be completed. And
And it needs to be done in the beginning of the
yes,
when you first
upon
hire them.
hiring. Mm-hmm.
Some people will sit there and say like, because I actually have a tax. It's like my Q4 tax post that I normally do, and it talks about stuff like that if you don't, but you really want to get it in the beginning because you don't want to go back and they be like, oh, hey, can you answer that phone? You don't want to get into that position where they be like, oh well, you know, you hired them in January and then they didn't fill out a 1099 until November, and you looking like, but I ain't, you can't claim anything from January to November. You know what I'm saying?
Yeah, I'm bad with
So
that.
it's
I
like
ain't
it's
gonna
one of
hold
those
you.
things where you really want to like have like a application like put into place beforehand. So like even as business owners, you guys like get them like literally go to Google, get you a generic application, get you a generic W-9, get you just get you all the forms that you need, and they're generic forms. Get you a file so that way no one can sit here and say that, oh, I didn't agree to none of this stuff, and get them signed in.
I agree. And that's something that I slacked on for real. Like I would hire, especially having as many people as I do, I would hire them and we'll send it out. But doing that due diligence of making sure that they complete it has definitely been a thing. So like, and then first of the year, like January, I would just be running around trying to get everybody's stuff. My tax preparer mad because she's like, I'm missing this person, this person. So this year we've definitely been a little bit more a lot more diligent in making sure that those W-9s are on file because y'all, when you start getting a certain amount, like when you start getting into those higher number of contractors, it is a lot. Like I know for me right now, I manage about 67 contractors across all of my businesses. So I know for me, organization was important because I could not imagine trying to get 67 dang on W-9s in, for my tax person by the end of the year. So it's just something I totally agree with Taylor. Having that hiring process, but not even having that process in place as far as your paperwork, but also enforcing it. Making sure that when you do hire these people, that you are making sure that they're completing it. And I know sometimes, and that's just being real and transparent as a business owner, those small things can fall between the crack, especially if you're in a hiring frenzy, you're trying to hire somebody quick, you know what I'm saying? But it's important that you take that time to be able to take care of those necessary business needs. That way, when it comes time to tax season, you're not doing all this scrambling up and you're not trying to get all this stuff together before January. What is usually the third and usually the 31st or the last. What's the day that you have to get the stuff in the January 20, I mean, get the
January
W-9s out,
31st.
the W-9, I mean, the 1099s out.
1099 and W-2 should all be sent to people out by January 31st.
January 31st is the deadline for it. All your
Mm-hmm.
employees and contractors should have their necessary tax preparation documentation.
And make sure that you're sending it in. So, like for people who want to take the inexpensive route, I'm not gonna call you cheap because I understand it's the inexpensive route, and you do the W-9 yourself. Make sure that you are sending a copy to the IRS. That is the key. Most people just do it and they send it to the people, but they forget to send it to the IRS.
Yep, I
So if
did
you
that
physically
too.
doing it, so if you physically doing it yourself, make sure that you are sending a copy to the IRS as well, so they will have it on file when it comes down. Because what you don't want is some discrepancies where you're writing that amount of money off, and then they don't file it for whatever reason. Because they may not even know that you forgot to send it in, but they for some reason just didn't file. But you took this deduction, the IRS audit you, they realized that next, like, oh, no one filed a 1099 for this particular thing because they don't have a copy now. They're not responsible because you never even sent it to the IRS. So now you got to pay back the taxes on that money because I mean you didn't send it in. So it's just about those due diligent things to be able to do it, so that way you're not being caught on the short end of the stick.
I agree. And like I said before, I know how it is. Taylor knows as well as an entrepreneur. It's a lot of hustle and bustle that goes into it. And it is a lot of small nuances that can be hard to, you know what I'm saying, that you might miss sometimes. But if you do your due diligence at the beginning and if you take the proper steps to do what you need to do, it makes it a lot easier. And outside of being prepared, it's also working with people that are experts in that field. I can definitely say that in investing in an accountant and not doing those things by myself, it's made it a lot easier for me. I can also say that investing in mentors, consultants, all that stuff, even for myself as a consultant, it's been beneficial. So, guys, I tell you, you got to invest in yourself and your business, and that's something that a lot of people try to skip on. You know what I'm saying? They want to do everything else with their
Mm.
money, but they don't want to pay that little bit of extra to be able to get somebody that's an expert that makes sure you're good. That includes
Well, I don't
something
think
like,
it's that. I'm gonna
go
sit
ahead.
here and I'm gonna stop you on that. I'm gonna say they don't know where their money is going. So that goes back to the organization of your business revenue, you guys. Like it sounds like a broken record, but I guarantee you, if you actually go through and you organize your business and you actually see your profit and loss and you see how much money you're bringing in versus how much money you are actually kicking out, you will literally be able to determine like, oh, I actually got money to do this. I love to use hairstylists and barbers as an example. Y'all are the worst kind of business owners. I don't care. I'm sorry. I
That
love
is a and
y'all.
nail
I
techs. Don't forget the nail
yeah,
techs.
nail tape. Anybody that does anything from a beauty industry, I'm gonna say beauty and cosmetic industry. Y'all are the worst. I love y'all. I got those. I have some of them my clients. They know they work my nerves, but I love them to death. But you guys are actually the ones that if you do it full time, you actually make the money. You just don't see it because you're not tracking your cash, or you got too many forms of payment methods. You want to pay Cash App, you want to pay PayPal, you want to pay Venmo, you want everything. You want every single thing that can come out, but you're not tracking everything properly. And I am going to probably have to like pause for a second, because the doctor just came in.
Okay, no worries. Actually, that kind of covers just about everything. And I know, for y'all that just got on, Miss Taylor is about to pop, so she is at the spot, and I am
I don't know what your schedule is this week, but I'm literally like it's not until like I got another whole another week. But if you got time for another one this week, I'm good. So we can kind of pick back up. I didn't get to cover the S corps and the LLCs, but I don't want to leave y'all hanging. I was not expecting to have to come to the hospital today, but they end up making me come. But I definitely want to make sure about if you have time and you want to schedule something else later this week, just let me know.
okay, cool. I will check my calendar and I will follow up with you. But for you guys that tuned in live, please make sure you still share so we can make sure that people are getting this information. But outside of that, Miss Taylor, I appreciate you. And guys, I hope that you have a great rest of the day. If you are looking for a business consultant, if you are looking for business plan services, I specialize in startup businesses. So if you are a business between the years of 0 and 3, I am here for you. I can help you organize your business if you're feeling lost, stressed out, you've been in the business for a minute, but you haven't been making money. I also work with retirees. So if you know somebody that's at that transition point of retiring, I have a lot of clients that are at that 20, 25 year mark, and they like, I don't want to take that chance and, I want to make sure I'm prepared when I retire. I don't want to work at a Walmart. I don't want to do this. I want to be able to make my own income. I do that. And for anybody that's looking to go into full time, if you've been running your business on the side for a certain amount of years and you feel like you're ready to go to full time and you don't know what that looks like, I do also help with full time business transition. So that helps you transition from your job into full time entrepreneurship. Just a little about me: I have 11 years of of business experience. I currently own and operate 4 successful brands. And I also love what I do. If you ask anybody that's worked for me, you can check my reviews on Google and Facebook as well. I'm all about the entrepreneur because I know how it feels to start a business and not really know all the steps of what you're doing or what you need to do to grow your business. So I specialize in providing that affordable assistance that you need, from business plans to logo design, landing page design. All of my services have a payment plan where you could just pay 25% down to get what you need, and everything else is paid on the payment plan. So just know that if you are looking for a business consultant, if you are feeling lost in your business, you don't know what the next step is, you're not gaining traction, I am here for you. Feel free to shoot me an inbox. You can check out my business page. You can also go on my website. But just know that if you have startup business needs, Be the Entrepreneur is here for you. And we'll be back with another Talk It Out soon. But outside of that, I hope you guys have a great rest of the night and y'all be safe. And y'all go ahead and take these tips and get ready for tax season 2023. Night. Oh, I can't